Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of April 13, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week, mortgage bonds still remain near record lows. If you take a look at the bond chart on the screen, you can see the two blue lines there are acting like a trading channel. The bonds are stuck in that channel. They can't break above the top blue line. They haven't broken below the bottom blue line. So we're looking for a breakout. And if you look on Friday, there was a green candle, so we bounced off support. So we're looking for that bond to hopefully move higher, break through the ceiling of resistance, and move interest rates lower. So with that in mind, we're going to recommend floating your Delaware mortgage rate to start the week to see if we can break out of this channel higher. Now, if we do break out lower and break below support, we would recommend locking. But for right now, float, and let's see if we can get Delaware mortgage rates to move lower. Now, if you look at the next chart on the screen, that is a 2-year chart of the bonds, and you can see the blue line there is the trend line. The 2-year trend, long-term trend, is for mortgage bonds to continue to move higher. That means we might see interest rates move lower significantly into the summer if this trend line holds. Now, if it does break and it breaks below that trend line, that would be bad news, and we could see mortgage bonds then spike higher, and it could go considerably higher. But the long-term trend is for that blue line is to keep going up. You can see we're pretty far away from that. So that's good news there. Heading into the rest of the year, we are looking for interest rates to stay low because of the 2-year trend. Now, if we dig into the economic news, the big report which was released on Friday, April 3rd, was the March jobs report for 2015. It was a stinker. Big disappointment. Only 126,000 jobs created, well below the 250,000 was expected. And then they also revised January and February lower by a combined 69,000 jobs. Unemployment rate did remain the same at 5.5%, but the labor force participation rate dropped from 62.8% to 62.7%. So all in all, very bad jobs report. That did help mortgage bonds move higher into that trend channel we saw on the bond chart previously. Then the Federal Reserve had their meeting on, well, they actually released the minutes from their March meeting on Wednesday, and it showed what everyone was expecting after that jobs report, that they're not going to raise the Fed funds rate in June. There's no way that's happening. September at the earliest now, maybe not until the end of the year. They basically said it's going to be data dependent. Well, the data stinks. So we don't see them raising the Fed funds rate in June. That helped the stock market rally and also helped the bond market rally. So we'll have to see if they do raise it this year or not. And then Thursday, we saw the weekly initial jobless claims come out. It did jump higher to 281,000, but the previous week at 267,000 was a 15-year low. So 281,000, still a very good weekly initial jobless report, well below the 300,000, so that was good news there. Now, in the housing news, CoreLogic released their February home price index, and it was up 1.1% from January, and it's up 5.6% year over year. So another very good report on housing, showing sustainable home price appreciation, and the shortage of inventory nationwide is going to keep home prices appreciating. We're looking for the 2015 home price to be somewhere between 5 and 5.5% year over year. Then we saw vacation home sales were reported for 2014 at 1.13 million units. That was 21% of the market, and that was up 57% from 2013. So huge surge in vacation home sales, and most of that is from baby boomers looking to buy retirement homes. And then we saw owner-occupied homes was still 6% of the market at 3.23 million homes sold in 2014. And then in the local news, USDA Rural Housing is underwriting files submitted on March 30th as of Friday the 10th. So there's still about a 10-day lag for them to underwrite. So please add 10 days onto your closing date when you're writing an offer contract to allow for USDA to underwrite. And then the local news, the next free first-time homebuyer seminar is Saturday, this Saturday, April 18th from 10 a.m. to noon in Newark, Delaware at the Christiana Hilton Hotel. And then the next one in Dover is the following Saturday the 25th. That's from 10 a.m. to noon, and that's at the Dover Holiday Inn. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.